Hi everybody, I hope you had a great week. This week we are talking about the employee retention credit again. I hate that we're talking about the employee retention credit again, but the IRS is issuing repeated warnings at this point, and really want to make sure that we get the word out. So we're going to talk Tax Myths, Employee Retention Credit Edition today. Myth number 1. I'm sure that you receive these phone calls as often as I do. Receive up to $26,000 per employee. It's easy. Everyone qualifies because there were supply chain issues and government shutdowns. This is what every phone call, every email, even some letters that look suspiciously like an IRS letter but are not, are trying to tell you. Those promoters are making it easy to file a claim. You'll return their phone call, they'll get a little bit of information, they'll charge you a very large fee, and they will produce the 941X to amend your payroll tax filings for those quarters and get you money back. It may take the IRS a year to process that refund. But the reality is that even though the promoters may make it easy to claim the credit, it's not necessarily easy to qualify to actually claim the credit legitimately. It's a complex credit. Generally, you had to have a significant revenue drop from 2019 to 2020 or 2021, depending on which year you're trying to qualify for. There were some provisions for government shutdowns and for supply chain, but the IRS is continually pushing out information, guidance on what they will accept. And in most cases, the businesses that ERC promoters are using those for don't actually qualify. Myth number 2, that you don't have to pay it back. It's not quite a myth. Indeed, you don't have to pay it back, but you do have to amend your 2020 or 2021 tax returns to reduce your payroll expenses by the amount of the credit. So if you had $100,000 in payroll that you deducted on that tax return and you received a $25,000 credit, it's going to reduce that payroll expense by that $25,000. And in doing so, it's going to increase your income for that year and increase your tax bill for that year. It's not dollar for dollar. You're still coming out ahead if you actually qualified for the ERC. But be aware that there is that tax liability that's required, and the promoters are not publicizing that information. Myth number 3, the promoter, the ERC firm, says they'll defend the claim if audited. The reality is that most of the promoters that are filing these claims are having clients sign something saying that they attest that they meet the requirements, meaning the ERC firm is not taking responsibility for whether or not you actually qualify. They're just doing the paperwork to get you the credit. So they're putting the blame back on you. The ERC firms are not likely to cover the cost of penalties or interest. They're certainly not going to pay back the credit that you've received. Anecdotally, the most they're willing to do is refund some, but not all, of their fees. So they're not paying your audit fees. They're not defending you. They're not giving you back these funds. So in the end, please be careful. Listen to your tax pro. A lot of the promoters are saying your tax pro doesn't want you to know about this. That's not true. Your licensed tax professional has your best interest at heart. We value our licenses. We're not going to allow you to claim or help you claim a credit that you're not actually eligible for. But if you are eligible for it, we do want to help you with that. Be careful who you give your information to. The IRS warns that some of these instances are leading to some identity theft issues. And then always read anything that you sign really carefully. If they're asking you to attest that you qualify and you don't understand what that means, that's a problem. Do you have any questions? Is there anything I missed? Is there anything that you would like to know next week? Anything we should do a dive into next week? Definitely let me know. Subscribe if you'd like to, and we'll see you again next week. Bye.